Hello everyone, Evan here from Hef Trade. Hope you're having a great day today. Today I'm making a video to show you my thought processes for how I put on, keep, and take off trades. On the screen here you see my Tasty Trade account. I think I have about 10 positions on. Alright, so I have my IWM's position here. This is an Iron Condor. If you've seen my Iron Condor video before, you'll know that an Iron Condor requires the price of the stock right here to stay between 175 and 200. And so as you can see, 193 is approaching the 200 area. So I analyze this type of trade in one of two ways. First, I look at the price of IWM, and obviously I know that this is between 175 and 200, but while I'm sitting here, I go, okay, well, what's happening with the chart? And then secondly, what's happening with the option chain and the delta? So if we click on trade, we'll go down to the August cycle here, and I'm going to scroll up, or I'm going to scroll down. So if we're looking over here, we're seeing this is the short strike at the 200, this is the long strike at 205. And so I focus a lot on the delta value. So the delta value here is 29. And then down here, the long strike is, the delta value is 15. If I were to even think about this even more, if I click on this short 200 and then I click on the long 205, looking over here at the probability of profit, I still, if I were to put this trade on right now, I would see a 73% chance that this trade has some profit. And with that, even the P50, this is the probability that the trade will reach a 50% profit of $109. There's an 80% chance of that. This is bringing in a negative delta, which means basically this is like working against the market. It's positive theta, so that means that this is bringing in I'm collecting money every day that the price stays below 200. And then there's some other metrics like how much this would cost you to be able to open this trade here. So this is kind of information that is useful if you're trying to analyze a trade that you're like, I'm getting kind of worried. What's some kind of objective way I can look at this and then move and then keep this trade open. Looking at the downside, the bottom part of this trade, you can see that I'm holding the 175 and the 170. I see the delta here is at 0.08 and then 0.05. So these delta values are way down there, way low. Again, if you're just sitting here thinking like, what do I do about this trade? At Tasty Trade, what they tell you to do is if it's not touching any of your strikes, you do nothing. So mentally, it is a little bit of a concern to see the stock approach the short strike on one of these parts of the Iron Condor, but objectively, do nothing. It's still working out. Yes, it's losing money a little bit, but it's not in any kind of loss territory at the moment. Secondly, I said a second point about how to analyze this type of a trade. Secondly, I go over to the Thinkorswim platform, and that's where I look at the charts. Or if you're not interested in trying to use two platforms, or you're not super interested in the technical analysis side of things as much as I am, then the Tasty Trade charts probably will do you fine. All right, so I have an alert set up here right around 200, and then I have an alert down here right here. It's at 175. So I can see this Iron Condor is still in between 200 and 175. I'm sorry to put this nail in the coffin here about how it's between, but this is just the analytical side of how you think about this type of a trade. Maybe people are not as maybe other people are not so overthinkers like I am. But I am an overthinker, so I think things over and over again, and I analyze things, and I take my time, and I'm sure some people can come to the table and be like, it's in between, and then they'll just move on. But for me, it's I have to think about, okay, what could happen, what's going to happen, I don't know. So like that's why I like to draw the trend lines. I like to draw the, you know, the support and resistance areas. I go back in time and I see where is the other support and resistance areas that are, you know, where do those exist? So that's one other thing that I would do. Go over here and I'm gonna go back here. Like I'm looking at this support, like this area right here was a support resistance back in like 2020, because the 200 level is the level that's going to get threatened in this trade. Like I don't really believe 175 is going to be the area of concern. I think the 200 level is where we got to start having to you know, take action. So yeah, like if we're looking here at like 202, there was like a, you know, a high side to this part over here. These candles confirmed that there was like a support resistance level. So this 202 area, if you can see on the right side of the screen, there's 202 area is like a possible pushback from the high side of this current trade. Now 200 is a psychological level, so it's a good area in my belief to place a call credit spread to the high side from when I put this trade on. All right, so that's IWM. Like I said, doing nothing for IWM right here. Coming close to $200 on the day. This is a big day for me. Really happy about this. I'm sure you can hear it in my voice. All right, so going down the list here, we'll unpack some of these other positions. So we're gonna look at Royal Caribbean. I don't know why this stuff just jumps around like this. If you watch any of my YouTube shorts, you'll see that I had a Royal Caribbean short call credit spread, and that trade did not go according to plan. So I kind of put on a flip side trade here, thinking that in the next month, the Royal Caribbean will kind of push higher, and we'll analyze my thought process when I put this trade on earlier today. Back to Royal Caribbean, we're going to look at the technicals here. Once again, going over to Thinkorswim, and I'm going to look at the chart and see what the chart has to say. If you look back here, this is March of 2021. This information that's right here is useful to us. So you can see that the high side of this part of the trade back in November of 2021 was around $96.90, something around there. So I'm going to click on a tool over here. We're going to put a price level. I'm going to find this area where these candlesticks are sticking out, and it's best if you can have it touch a couple different spots. So, you know, here's two candlesticks it can touch. Hopefully over here it can also touch on this spot. So yeah, that's what we're going to do, is we're going to put the price line right here. Right there, perfect. Now, as you can see, the wicks of these candles come above this level. So now these kind of candles, when you see like a green and like a red right next to each other, and these bars are like basically the same size, and then you can tell that the price like moves down. That to me is the biggest key in finding where these levels exist. Noting that I just said that these levels with the wicks are, you know, pushed up and then pushed back down. I'm going to use that information to make my assumption for this trade. Now it is an assumption because I could be totally wrong, and random things happen in the market, and we never know what's going to really happen, but we can just make what we assume would be a high probability trade and go from there and protect our losses and set our take profits. And if it works, it works, and if it doesn't, then, you know, that's how it goes. So you can see on the right side of the screen where it says $99.51. It's actually, the price right now is 10 cents above that level. So my assumption here on the long-term time frame that we're looking at, this is the weekly time frame, is that this level where the dotted line is the strong support that Royal Caribbean is going to touch, and then it will probably play with this level, and people will decide whether or not the price is going to continue higher from here, or you know, whether or not it's going to move lower and break through this level. So that's kind of my thought process with the Royal Caribbean. The stop loss here at $2, and then the take profit at 65 cents. So if it hits about 50% profit, I'll take the trade off automatically, and then if it loses about $70, then I'll just take the trade off. Because so using the Analyze tab here, you can see the theoretical P&L is at -30, and the trade just opened, so that's not the actual P&L that I'm down right now. But if it moves down to my 95 short strike, you can see the P&L Theo is at like -90. So we could say that's like a -60. That's like a $60 loss. And then if it breaks, I'm pretty much wrong on the trade, and I want to be out of it. So, that's why I have a stop loss around $70 of a loss. So $70 loss would be right around here at $94 and change. And yeah, that would kind of confirm my thesis on what's going on here on the chart. If you look down here, $94 and change, it would need to basically bounce off of these lower parts of these candles here, and then jump back up. Now, looking lower on this chart here, $92 looks to be like a decent area to be long in this trade. But again, my current thesis is 95 and up. That's what is looking like an area that I'm willing to take the risk to be in this trade. We'll see what happens in a few days from now. All right, so that's Royal Caribbean. Google. Okay, so this Google trade is something that I use the technicals on Thinkorswim to figure out. So I would like to share this Google trade as a good example of some technical analysis that I used, and my theory that I came up with yesterday as to how I think this trade will play out. The trade idea I have going here for Google was Google's moving down in this downtrend type pattern. Now, I like to use the RSI, the Relative Strength Index, as one of my only indicators to help me figure out where the price is low. And I also use support and resistance lines to show me where the price has low sides and high sides. So the conjunction of these two things, whether or not they do the same thing, I find they have some value to put together. So I use support and resistance and the Relative Strength Index to find myself good trades. So 2 days ago, or yesterday, it was like 2 days ago, you can look down here at the chart and you can see if we look, okay, so I'm going to explain. The RSI here was blue, which means that it's oversold. So that people have been selling Google up from 129 down to 116. So the RSI is showing that it's oversold. And then people started to buy a little bit, because when the RSI is oversold, it's kind of a time to say, hey, it might be a good place to buy. So there was a little bit of buying, and then people started selling again. And so the selling happened once again, and then it hit the RSI and turned blue a second time. Now, here's where this can get really good, is if you could have noticed that there's this downtrend happening, and you can see that the price touched here, it went down, there's a lower high going on, price moved down again, and then there's another lower high going on from what happened from before, and then the price moved down again. But this time, the low wasn't lower than the previous low. So that's kind of a bullish indication that, yeah, the price might be moving upwards. So I drew this line going down this way. And sometimes, it could hit this area and come back down and then move forward again. And I actually have another example in my portfolio of another trade that I have going on that I'll show just in a minute after we talk about Google here. But just stick around until I describe this trade so that we can go over to that other trade to see that currently in progress. So I said to myself here, if the price is going to break through this downtrending line, then a new uptrend might be beginning. Now, obviously, looking at the RSI and seeing that it's overbought, it's red right now, is kind of a scary idea, a scary thing to overcome. You're looking at it and you're like, okay, well, it broke through the line. That's good. That's what I want to see. But then you're like, well, it is overbought now. I don't know. But the original thesis was, if the trade went through the red line here, it might be a good time to take a trade long. So that's why, if you look on the chart here, I have a mark that is saying at 118, that would be where my stop loss is, and at 125, that is around the area of where my take profit is. And I plan on using like a different strategy for this type of trade, but I have put on a put credit spread here for Google. So we'll jump back over and we'll look at that trade now. So Google here, I have the 120, 115 credit spread. Currently, the trade is up $6. I put it on earlier today. So, it's moving a little bit, but not too much. But that's pretty cool. So going back to, and then, I have my stop loss 207. So if the price goes up from here by like $70, then I'll take it off. And if the price moves down like $90, I'll take that off. But here's the strategy that I'm going to look to employ on this trade, just to kind of try something different. So once this line up here gets hit, the price and my profit should reach a certain level that's like, okay, I have profits on the table. Now I want to protect those profits. So what I'm going to do is, if you were like used to trading like futures or like short put, or just like straight calls or straight puts, and you're like a day trader style, like day trading style trader, then I plan to use that kind of idea in protecting my profits in this type of a trade. So what I plan to do is, once this line gets hit, it's gonna say like, hey, it'll text my phone and it'll be like, hey, like bring the stop loss up. So I'll bring the stop up to break even. That way I can't lose anything on this trade. And if the trade continues higher, I'll make money. And if the trade comes down for like a bounce, then I might get knocked out, or it might keep me in, whatever. But at least that's the strategy that I'll be using for this trade. So ignoring the RSI being overbought, that's the mindset in the trade. And having the stop loss is going to fortify the idea that I'm going to be able to stay in this trade without having to overthink like I do about this trade, and I'll be comfortable with the loss if it comes, and I'll be satisfied with the win if it's able to produce a win. And now I'll show you a different example of a technical analysis pattern that I saw on a different trade, and I'll probably end the video there. Underneath Google, you'll see here O. All right, so we're over here with Realty Income, ticker symbol O, and as you can see, there is a long-term downtrend that is happening here. And apologize for all these lines on the screen, but it makes sense to me. Hopefully it makes sense to you. One of the things that I did recognize in looking at this chart here is, I recognize and understand that these guys pay a dividend like all the time. And so a lot of the time people will buy this company when the dividend comes out, and then it'll get sold off after the dividend is paid. And then like people will buy the company up, the dividend will get paid, it'll get sold. So you can look over here, lots of buying probably happened because the RSI was oversold, it was really low, and then like the dividend came out, a lot of people were buying it or something like that, and then it got overbought up here, and then it just came back down before the dividend happened again. In order for me to kind of like think about what could be the possibility with this trade, this descending, this like triangle like pattern right here, which was kind of the same situation as what was going on with Google. This, I believe, looks to be something that's going to help O break to the upside, just like Google will. So I feel like this dividend right here is going to cause a decent amount of buying pressure to happen. On the RSI, we're kind of in the middle-ish right now. It did hit the upper bounds of this downtrend line yesterday, and so I feel like we're going to bounce off of this support area, because you can see there's support here. It broke through the support here a little bit, but it did start like an uptrending type line here. So it could either bounce off this line here or continue to squeeze into this like down trending kind of pattern thing going on. And and then I feel like it could either break out to the upside, or it could just stick around this area. How if you look at like the the real estate ETFs, you can see like the overall trend in real estate is like moving upwards. That would be like a confidence builder in the thesis for this trade. So I went ahead and I did a diagonal spread for this trade here. So if we go over to O, we see I have it's down just a little bit, 15 bucks. So I did a diagonal spread. So this is, I sold the 62.50 in August call, and then I bought the 60 call in September. So what that looks like in the diagram over here is it kind of looks a little bit like a put credit spread in the same kind of sense, but it works really well with like low volatility. So if the price stays below 62.50 by the end of August, then I'll make money. So that's good. And then if the price breaks out of that descending triangle pattern and moves higher, then I'll still be holding on to a long call, and that long call will appreciate as the price increases. So that's kind of my theory in this type of a trade. If this stuff is useful to you, click the like button, click the subscribe button. This is Evan from HefTrade. Have a great day.